In this video, I show you a trendline trading strategy, how to find the right entries and how to find the perfect time frame for your trendline. And when we get started with trendlines, there are just a few things that we need to adhere to. And the most important rule when it comes to trendlines is that we need to connect 3 touch points. A trendline needs 3 points to accurately describe a trendline. 2 is not enough because you can always connect any 2 random points on a chart. 3 is the magic number. If you don't have 3 touch points on a trend line, you don't have a trend line. And then the next question that comes up is, are you connecting the highs and the lows? What do you do with the bodies? Is it allowed to cut through a body? And in my experience and in my trading, what I do is that I usually go for the highs. I go for the candlestick wick. And my number 1 rule for drawing trend lines is that I will never cut through a body. And this is gonna lead to a lot of consistency in your trading. So for example, if we are looking for a trend line somewhere like this, you can see this is usually a good trend line. You can see we have our first touch point, the second, the third, the fourth, and the fifth. So we definitely have a valid trend line. In my trading also, I don't worry if the market is coming short of a trend line for just a few pips, or if it's breaking a trend line for just 2, 3, 4, even 5 pips. That is the buffer that I will give this market. And then this is how a good trend line should look like. You can see we have definitely enough touch points. And then the next question is, how do you find the right time frame? On which time frame do you execute your trades? How do you get into trades? And I use a 50 period moving average. I use the SMA, you can use the EMA. And the rule that I have for finding the right time frame is very simple. I look for the time frame where the moving average hasn't been broken a lot, or on which time frame the market hasn't broken the moving average at all. So here on the Euro US dollar, I would go for the 4-hour time frame. And you can see here the trend line is accurate. We don't have any bodies cutting through a trend line. And also at no point did the market here during this uptrend violated the moving average. So we are looking at a very relatively moderate volatility market. You can see even when there are correction waves, the correction waves are not too deep. So this means the market doesn't have too much volatility, which is a very important characteristic because it means that going forward also there is probably not too much volatility we can expect. Obviously, we don't know for certain, but this is the only thing that we have as traders. And then what you're doing is that you're simply waiting for the trend line to break. You're also waiting for the last swing low to break. And then you can decide, do you trade the initial breakout or do you wait for the retest, such in this case. Retests often happen at either the breakout of the past swing low. So you can see here I drew the horizontal level at the last swing low. It's very common to see a retest happening at previous swing lows where other people draw support and resistance level. That's very important. Market will often respect that. Or a deeper pullback into the moving average is also often very common. That's something that you will see. A trend line retest, especially if the trend line is that high, is not as common. It will happen sometimes, but it's usually not as common when the trend line is that far away from the last swing low or swing high. And then this is usually where you look for re-entry opportunities. You could go to a lower time frame even, but that's the general idea behind the trendline breakouts. This is something that a lot of my students traded. So we are looking at the US dollar Singapore on a 4-hour. And when we go here, first of all, the moving average will help us immediately find the right time frame. You can see the 2-hour looks great. We do have a few violations, but not too much. Nothing that would give me sleepless nights. So the 2-hour is a good time frame. And now let's try to find where do we get our trend line in. So you can see we immediately have a very nice trend line. We have our first touch point, second one, and a third one. And then here is our, not 3, 4 obviously. So we have a valid trend line. I always like to use also support and resistance levels in combination with trend lines because trend lines are very subjective. You can use the last swing point here, for example, or even here. And then you simply trade breakouts out of the trend line, out of the last swing high. And you can see this would have worked very nicely here last week. So a good trendline strategy, obviously you can also combine it with a multi-time frame trading approach, which is something that I do in my trading. So I start my analysis on the higher time frame and then I drill down to the lower time frame where I then execute my trades. Another very interesting example here on the US dollar Swissy. So first of all, what is the right time frame? The 4-hour looks good. We don't have any violations here of the moving average to the downside. So that's great. And let's see, can we find a trend line? By the way, sometimes it's even easier to draw a trend line starting from the right. You can start here from the right and then try to see, do you have a trend line here in this market or not? Sometimes if you have too much fiddling to do, then it's already sometimes not a good sign. But in this case, we do have a valid trend line here. So let's see, counting touch points, 1, 2, 3. Here we are missing the trend line, but we still have our 4 touch points, which is plenty. And then here you can see, whoops, not the right thing. Here is then a potential breakout. The market actually hasn't broken out yet. So this is a very interesting setup. We are potentially looking at a new breakout. And then this would be an against the trend trade on the higher time frame. And a very interesting top-down approach here. So something to look out for maybe this week. Here in the past, the market provided a very interesting scenario. The market grinded higher here above the moving average. You can see we do get a trend line in here. Sometimes you have to see which are the best lows to connect. And here you can see, oops, see, yeah, that's how you do it. Roughly, so 1, 2, 3, and then here even a 4th one. The last swing low was here. You can see this market is doing a triple top. If you use a Bollinger Band, you probably have a Bollinger Band spike in here as well. You have a significant RSI divergence here if you consult the RSI. So here's the RSI. Let's see. Here are the highs on the price action. And if we just connect the highs, so from here to here, you can see this is actually not a true divergence. This is equal highs. But then you can see from here to here, here is where we then have our divergence. The RSI is declining as the price action is just slightly rising, barely making higher highs. And then you can see here, this is where the market then dipped below the moving average, below the trend line. And you can see the RSI also entered here, the 20 area, which is a very significant bearish mode. So let's maybe look at a final example where we also look at retests. And here you can see the market has been trending higher. And we can definitely use a great trend line here. Nope. 1, 2, 3, 4, 5, 6 touch points. And so we are looking at a very valid trend line. More than enough touch points. You can see the market has broken out here and then retested the moving average. You can see here at this area a lot of things came together. We have approximately the trend line here as well. We definitely have the moving average that is being retested, and then a very nice pattern here which you can trade on the lower time frames. Deceleration, acceleration happening here. So a beautiful setup here across all the time frames. You will have a divergence here, that's for sure. Let's try to bring back our RSI. Very easy in trading view. And let's see, here's the price action, and when we connect the highs on the RSI, you can see we definitely have a divergence here as well. So here, great chart studies, how you can build a trading approach with multiple confluence factors. We have trend lines, moving averages. You can even add RSI divergences, and then you can choose, do you trade breakouts, do you trade retests and pullbacks. And that's how you can come up with a great trading approach based on trend lines. And it works on all markets and all time frames. So have fun with it. Let me know in the comments below if you enjoyed it. And until the next